Very excited to welcome back Andy Schectman to the show. As there's geopolitical turmoil, there's inflation rising, there's no better time to understand what's going on. So welcome back, Andy, as we go through these news stories.
Yeah, man, it's been a couple of weeks. I took the first vacation I've taken in God knows how long. My wife, under penalty of execution, made me shut my phone off. We were in Mexico for 10 days, so it's good to be back in the saddle, and hope you're doing well. Good to see you.
I wish you were coming back to a world that was less in turmoil, though.
Yeah.
That'd been nice.
Yeah, well, you know what? I think there's a fine line these days between pessimism and realism, Elliot. And, I think part of being able to persevere and to find our way through these times is to realize that there are problems, and realizing them gives you the ability to try to formulate a plan. And that's what these meetings are all about.
Exactly. And so the first big headline that's just popped up is just the elephant in the room. It's so big, so impactful for so many reasons, and it's out of control. Producer prices rose 11.2% from a year ago in March, the biggest gain on record, meaning in U.S. history. So what is your take on this? I know you've been calling for out of control inflation for a while now.
It's all Putin's fault, right? I mean, it's all Putin's fault. Look, it's almost hard to believe this statistic. But in 2020, I was on the heels of the repo market debacle, where the Fed was pummeling in hundreds of billions of dollars a night, if not more, into the overnight repo market to keep the banks liquid. We talked about 20% of every dollar ever being created in the history of the country happened in that window of nearly a year. In 2021, that number jumped up to 50%. We were talking about 50% of every dollar ever created in the history of the United States had been done in the past year and a half. The new numbers are out, and I welcome people to Google this, because it's almost you can't fathom how stupid this is. But when we talk about inflation is, if you can go find a dictionary, an older one that hasn't been changed to fit woke agendas, the definition of inflation is an increase in the money supply, period. In the past 2 years, since 2020, 80% of every dollar ever created has been created in the span of 2 years. You have a massive injection of money into the system that in Austrian economics is what Ludwig von Mises would call the crack up boom, where you have a massive expansion of credit, a massive injection of money into the system, which creates misallocations in capital and in resources. And when you see the prices going to the moon, not just in asset prices, as we've talked about for a long time, but now it's finding its way into everyday commodities. And when you see the PPI, the producer price index, moving up, that is a precursor to the CPI, because if the products cost more to produce, it's going to cost more for the consumer to consume. The CPI is a bogus measurement of inflation anyway, as it excludes many of the things that are really inflating. In 1980, they adjusted the CPI to fit an inflationary agenda. And if you use the measurements just the way that they were prior to 1980, you're looking at 16% inflation. And a PPI at these levels, all-time high on record, means that inflation ain't going anywhere anytime soon. It's going to continue to roar higher. And I think that we are far enough down the path where if you pull the needle from the junkie being the economy, and the heroin being the money, and the stimulus and the low interest rates, there's going to be an awful lot of convulsions and a lot of pain and suffering. And so, you talk about a Fed who says, well, we're going to get tough on inflation. Well, I guess I would say a few things. If they've been so hell-bent on getting tough on inflation, then why did they continue to add to their balance sheet even after they told us that it wasn't transitory? If they were really serious about getting tough on inflation, then why only raise the federal funds rate this coming meeting by a half or 0.5% or 50 basis points, as it's called? when you have inflation running at 9%. Why wait until the next meeting? Why not do it today? Why wait until next month to start selling however much? I think it's $1 billion a month, whatever the number is, off their balance sheet. Why wait? Why not do it now? And if you're going to get serious on inflation like Paul Volcker did, he raised rates to 18 or 19%. We're talking about raising rates this meeting to 0.75% from 0.25%. It's jawboning. They're not serious about it. They're waiting. They're kicking the can. They're lying to us. They continue to add to the balance sheet even after they admitted that it was structural and not transitory. It's a bunch of nonsense. And so the PPI numbers are reflective of more of the same. And I think you'll continue to see prices and inflation roar higher, at least through this year and probably deep into next year by the way things are looking.
Yeah, because you have the consensus estimates. I'll put it up on the screen, but there's the consensus inflation estimates versus reality in 2022, and it's exactly diverging. And so it's just quite opposite. So people are surprised. No one's expecting this. You've known this all along that it's going to happen. Pretty much it's going to be a surprise for people, essentially. And people do think it's peak inflation right now. That's the new call, right? Have you heard that? Big banks are all saying we finally hit peak inflation with this big PPI print. What is your take on kind of where people's psychology is on the inflation?
A bunch of nonsense. The mainstream and the economists have been wrong the whole time. It's a bunch of nonsense. And I heard peak inflation months ago. They don't know what the hell they're talking about. And quite frankly, if they slow things down and try to raise rates and pare down their balance sheet, you have stocks, bonds, and real estate all inversely correlated to a rise in rates. They're not going to sacrifice the market. And, you could argue maybe this is why they pushed the Russians into the open arms of the Chinese. Maybe they want to blow up the whole system. Klaus Schwab talks about this great reset. This great reset is something that I never really believed would be true, but look at the values of the stocks, the bonds, and the real estate at all-time highs, inversely correlated to a rise in rates. So if you kick the Russians out of the SWIFT, you weaponize the dollar, you force our foes into seeking alternatives. Now you can blame Putin and the Chinese for blowing up our whole system because, just the other day you get Russia saying we're going to sell our oil, our gas, and our coal to China for yuan. You had Nigeria do the exact same thing, which remember we talked about Russia protecting Nigeria and Saudi Arabia. Now Saudi Arabia is negotiating openly with China to sell their oil for yuan. So you are moving away from the dollar. You are pushing people into the CIP system, which is the cross interbank payment system, which mimics the SWIFT system that the Chinese and the Russians have developed. But all of this settlement for oil outside the dollar will be the death knell for the dollar. What has given the dollar its world reserve status is its relationship, our relationship with the Saudi kingdom, protecting them. For that protection, we would always have oil valued in dollars globally. Well, that's changing, and you can see that changing. And if you want to blow up the system and produce a villain, here's exactly how you do it. You incentivize the world to move away from the dollar as the global energy settlement or the petrodollar. All of those dollars come flooding home as OPEC says we're going to take other currencies for oil. As that happens, the dollars come home and interest rates spike. The dollar collapses and all four pillars of wealth blow up: stocks, bonds, real estate, and the dollar. The first three are inversely correlated into a rise in rates. The fourth is a dumping of dollars, right? A dumping of dollars. So you have all four collapse. There's your great reset. And then you come in with a new central bank digital currency, peg it to gold, and start all over. I thought it would be impossible, but it's really not. It's not that hard to figure it out as far as I'm concerned, how that could possibly happen.
So I guess on this note, which is, again, proving your case, we have this tweet: the global bond rout deepens on inflation, monetary policy jitters, US 10-year yield jumps to 2.78%, German 10-year yield on course to 1%. So bond rout, what does this mean? Where is this all going with bonds crashing?
Well, that's, bonds crashing and interest rates rising is basically what you're getting at. And so, rising interest rates is something that keeps Jerome Powell up at night, certainly. And I guess what I'm getting at is that the market, as you can see, is much bigger than the ability of the central planners to control. The market and even the jawboning that we're gonna start getting tough. The market is bigger than the ability of the central planners to manipulate it, and the market will dictate ultimately which way interest rates go. That is supposed to be how it works. For the last God knows how long, the central planners have been, the Fed has been setting interest rates. And that is the biggest problem of all, is that the perversion of the interest rate market has created all these distortions, these anomalies in price when the value of money is next to nothing. The federal funds rate at basically zero forever. Free money creates issues, creates problems, creates speculation, creates malinvestment. When you can borrow money at next to nothing, you go out and do things that you wouldn't otherwise do if money had a real cost to it, as it's supposed to. When I started in this industry, interest rates were 9%. So money had cost. You had to think about the way you structured things, and you could save money. You didn't have to deploy it to make a yield. So it's the perversion of the interest rate market, the manipulation of the interest rate market that has created all of these problems. When the dollar comes flooding home, or when the realization becomes stark that the banks can't really do anything but try their best to keep interest rates low, or everything blows up. People are scrambling for yield at this point, and I think you're seeing the beginning of the end for the bond market. It's the tail end globally of a 30-year bull market. So I think you'll see rates rise, and with it, the bond market is going to take it on the chin, and that's the mother of all bubbles right now. So I wouldn't be in bonds with a 10-foot pole, to be honest with you.
Wow. It's just an out of control, vicious spiral that we're seeing unfold. And so the long game here, I found this gem out of the South China Morning Post, state media, kind of like the vocal outlet for the Chinese government, essentially, right? South China Morning Post saying, debt binge, Russia sanctions will hasten end of the US dollar global hegemony. So someone in China is thinking about this. And just some sub points here. The US has rapidly rising debt levels at the same time as the value and integrity of its assets are being eroded. Its weaponization of reserves issue also increases the incentive for others to create alternatives for both trading and reserves purposes. So this gives us an insight into what they're thinking. What is your take on this and where it all leads?
That's exactly what I just said. You're incentivizing your foes to find another system by weaponizing the dollar. The world reserve currency is not for us to pick and choose who uses it. And when you do that, you incentivize others to find another path. When you look at the Russians being kicked out of the SWIFT system, you force them right into the arms of the Chinese and their CIPS system, which is the cross interbank payment system. You are making a lot of people think, am I going to be like the next entity kicked out of SWIFT, or an action like Trudeau did? When you make these types of unilateral decisions, when you act in a fascist capacity and kicking people out and deciding who and who cannot. The U.S. has almost a dozen sanctions against countries right now in relation to SWIFT. Look, you are hastening the demise of the dollar, and you are telling your foes, you better find plan B or you're next. And that's exactly what's happening. And that's what I was getting at. Is the realization stark enough that the Fed doesn't want to be blamed for blowing things up, so instead you create a villain? You see Biden going around blaming Putin for all the high energy prices, but if you go and look, the prices were skyrocketing months before the invasion, and this is your culprit. You can blow everything up. You can force everyone to de-dollarize. You can force OPEC's hand into picking other currencies to be the world reserve as it pertains to oil. Heck, Jerome Powell, our Fed chairman, came out a month ago and said, you know what, there's room for a second world reserve currency. They're acquiescing to it. You push everyone away. You see a massive dumping of dollars. Those dollars come home, create hyperinflation, interest rates spike, everything collapses, including the dollar, and you blame a villain, Putin and the Chinese. And And now you start all over. There's your great reset. That levels the playing field, brings everyone down to a common denominator. And this is why I believe you saw gold reclassified tier one. This is why I believe you're seeing central banks massively accumulating it and using the manipulated price to do so. And because they realize the end of the dollar as the singular world reserve status is coming, that there's going to be a reset, that there's going to be new central bank digital currencies. And if I had to guess, because of the tier one status, will be pegged to gold somehow in order to give it some sort of justification for trusting currencies again. Because once you get burned that badly, it'll take a whole generation plus to ever trust it again. Look at the Japanese Nikkei, which in 1990 was 40,000, and they owned Rockefeller Center and Pebble Beach and made anything with a motherboard or an engine better than the US did. Their Nikkei collapsed with interest rates at or near zero for the last 3 decades. It's still only roughly 2/3 of what it was then. It takes a whole generation to get people back into the market to trust it again. And as it pertains to currencies, maybe even longer. So you'll have a central bank digital currency, I believe, and maybe two, one in the BRICS nations, one here in the West, that is probably pegged to gold, not convertible, because convertible currencies convert. And we saw that at the tail end of the Vietnam War, when de Gaulle started draining the treasury of all its gold and trading his dollars in for gold. That was what you could do prior to Nixon closing the gold window. But they'll peg it to gold and have it denoted, the veracity of that gold, on a distributed ledger. And I think those days are coming. And if you wanted to draw a narrative for a great reset, it centers around losing the petrodollar status after 80% of every dollar ever created in the history of this country has created massive anomalies in asset prices. And you want to talk about a collapse, you have them way, way up here after being injected with heroin every single day. Now you pull the needle away and break it. Watch what happens to the junkie. Watch what happens when all the the money comes flying home, creates massive inflation, pops up interest rates, and collapses everything. And there's your culprit. And the Fed and the West can walk away saying, we didn't do this. This was all Vladimir Putin and the Chinese. And you create a villain and a distraction, and you then get your great reset. I hope to God I'm wrong, but it's not too far-fetched to draw that analogy right now.
Not at all, especially not based on the 3 headlines we just talked about, which literally kind of just point to exactly what you're talking about. So what is the theory here? For people that aren't familiar, what is the Klaus Schwab Great Reset theory? Because it seems to be playing out. So it'd be good to know the end game and why any powerful forces are even interested in doing something like this.
I don't know what their end game theory is, other than to say we have bilked the Keynesian-based debt-laden fiat system to the nth degree. We have created far more wealth and a far greater living standard than really we should have been entitled to, largely on the good graces of our foreign creditors. But we have a system that is $130 trillion in debt, with interest rates manipulated low, in a country that doesn't produce anything anymore. It's a system that has run its course, and there really is no way to back out of a system that is that indebted without starting over. And I guess it's just discovering the fallacy of the Keynesian-based economic system. The Austrian, in the story of the 3 little pigs, Keynesian-based system is the straw house based on debt and consumption and taxation and spending, whereas the Austrian school, the brick house, would be based upon investment, savings, and reinvestment. And it's a much stronger, much healthier system than the Keynesian system. And maybe we are so far down the road, they realize, hey, there's no way out but blow it all up. And that's kind of the way that I look at it. And when he says you'll own nothing and be happy about it, well, if interest rates went to the moon like that, like 20%, like they did in 1980, everything collapses. Stocks, bonds, and real estate, and the banks will own it all. And now everyone will rent from the banks. No one will own anything. Everyone will be bankrupt. Is that what he means? I don't know. Could it happen? Yeah. You could see the greatest depression of all time in that environment. And honestly, I have 3 kids, my youngest being 14. I hope to God I'm wrong, but something tells me I'm not. There are too many things pointing to the end of the dollar as the singular world reserve currency. The biggest being the admission from Powell, who says, yeah, there's room for two. So he knows it's coming. And with that, you end up seeing far less demand for the dollar if it doesn't have to be. Look, when Nigeria just 2 weeks ago signed an agreement with Saudi Arabia to sell their oil for yuan, go back to when we started talking about this in September, what a big deal I made about it. That was the beginning of the end for the dollar. This is the exclamation point. To see Saudi Arabia doing it, to see India doing it, to see Russia doing it. There are 7 billion people. If you look at 1 billion people in the West, there's 7 billion people in the rest of the world, and many of them will go the way of the BRICS nations with a system based upon commodities. Zoltan Pozsar used to work for the New York Fed. He's a brilliant guy, and he's talking about right now, you are witnessing right now Bretton Woods 3, where currencies will be backed by commodities, and that's what we are seeing, a transition away from the fiat system backed by nothing to a system backed by commodities. And if that happens, God help us all, it's going to be a lot of pain to go through. And I think we probably will see that.
Yeah, exactly. So you have interest rates spiking. They're the oxygen of the financial system. So that's going to bring everything down with it if they keep going. And what's different this time is it seems like the government, Federal Reserve, they don't have any tools anymore. They've had tools for the last 30 or so years and it's worked, right, to pump up assets. But now they don't have tools. It seems like we're being gaslit about it being Putin's fault. So that doesn't add any confidence, knowing that your leaders are kind of gaslighting you in that area. So if you want insurance against this system, which it seems to be kind of corroding a little bit, what role do physical metals play in this new world? And like, what is kind of the outcome if you're an investor in some of those?
They're the only inversely correlated asset to this to the financial system. And it used to be stocks and bonds were inversely correlated, risk on, risk off. But with interest rates pushed down so low as rates rise, they both collapse. They're no longer inversely correlated. I think gold, because it was reclassified as the world's only other tier one reserve asset in 2019, think about that for a second. For almost 80 years, the dollar was the only tier one riskless asset as far as central banks are concerned. They push gold up to that level. Why not central or special drawing rights from the IMF? Why not euros or yuan or ruble, whatever? Why choose gold? They levied it to a tier one reserve asset. I think it will peg or undermine a new system. I think they realize that if you screw people badly enough, you will need to put a peg into place so that they don't have to ever think about that again. And what better role for a distributed ledger to show the veracity of the gold being held. And so it ushers in a whole new central bank digital currency cashless system. And I think gold and silver is the only alternative to escape the matrix, to give you liquidity and to give you privacy and to give you, I think, the backbone of a new system. So when everything else collapses, it'll be one of the few things that have value that are not simultaneously someone else's liability, no counterparty risk. I think it's really, in my mind, with the exception maybe of working farmland, the only place I would put my money right now. And I say that with 100% sincerity, and I try to be objective and look for other places to put it. But all the other asset classes that are considered, pillars of wealth are at all-time highs, inversely correlated to that type of an event.
Right, exactly. And they are tied down to interest rates, which are spiking. And that's kind of the big scare that's going on.
I don't think you've seen spiking yet. Spiking is a whole different story than rising. And spiking would be a admission by OPEC that we're no longer only taking dollars, and you see trillions of dollars come home, and to see interest rates spike by 400, 500, 600 basis points like that, that's spiking. That's when everything blows up. Paul Volcker popped rates up to 20%. That's spiking. What you're seeing right now is fighting the trend of rising rates and the Fed jawboning and saying we're going to do the same thing too, but only seeing it raised by 25, 50, 75 basis points to, you're on the 10-year treasury. I don't know what it is today, but probably just over 2%, 2.5%, whatever those numbers are. That's not spiking. yet, especially when you realize inflation is running at 9% plus. So those days are coming. Rising rates, yes. Spiking, you ain't seen nothing yet if this happens the way I'm seeing.
Right. Regardless, it's so impactful because every time it rises, the system breaks, right? We've seen that so many times. So the system breaking is.
And that's why when you say they have no more tools, the only tools are to continue to lower rates, and you're already at a quarter basis point or 25 basis points above zero in the federal funds rate. So what do you go negative? They've lost their ability to fix the system. A lot of people think they'll raise rates to 3% or whatnot. And then when the market really starts to break, come back in and lower rates. That's why you need a reset. You're so far down the rabbit hole that there's nothing you can do any longer. And you've created so much debt, all of it based upon low interest rates, that if rates rise, the whole system literally implodes. It's the old adage, pigs get fed, hogs get slaughtered. We've been hogs, and we have created an environment that is illusionary based upon ultra low manipulated interest rates. The perversion of the interest rate market and massive doses of stimulus have created anomalies that will be dealt with by Mother Nature one way or the other.
Exactly. And so historically in stagflationary environments, you have gold and silver as the insurance. They usually do well. Where could people go? You're CEO of Miles Franklin, great company. Where could people go to potentially buy precious metals and protect themselves?
Well, our new website is almost done. In the meantime, send us an email at info@milesfranklin.com and put Elliot sent me or the early stage investor, and we'll make sure that your listeners get the best price in America. We'll send you an updated price sheet. And we'll continue to come back here and talk to people. And I'm always happy to chat with your clients and your listeners. And they can send me an email directly at Andy@MilesFranklin as well. I'll personally reply and make it a good experience. In 32 years, we've never had a customer complaint. Your listeners won't be the first.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.